Okay, let's crack on. Let us crack on. I think, boom. I'm in. Okay, right. Hopefully the audio levels are decent. Let's go back. Taz, if you're in here, can you just let me know how the audio levels are? So the mic compared to the background music. Hopefully it's all good. But yeah, I'm all good. I just put a little poll out into Learning Lounge, as you may have seen, seeing who fancied a little live session today. So I'm getting around to doing it now. Yeah, should be good to just run through and have a nice little look at the market. Bear with for 2 minutes. I believe it's all catching up, isn't it? On the stream. Wow, there's quite a bit of a delay. Is there? Oh, I don't know. Maybe it's just me. Maybe it's on my end. Right. Okay. We should be good to just crack on. Yeah, it sounds good to me. No phone in the voice. Perfect. Okay. Yeah, let's roll with it. Okay, sweet, perfect. So, I'm actually going to change music. I don't know why, but I don't like this one in the background. Let's change it to this. Please don't give me an ad. Oh, it has as well. Okay, so what have we got in the background here? Euro USD. That's a pretty good one to start on, to be fair. It's the last market that I updated into the VIP chat, so we make a browse there. Okay, boom. That's better music. Okay, we're with each other. We're in. We're good. So yeah, let's walk through what's going on. I don't know why I'm losing my bearings there. Pretty much, I was looking at this market. I'd say when it was like around here. So yeah, maybe like 3 p.m. So 4 hours ago. Now my expectation was for this to be the creation of an impulse, and I've just been waiting for the creation of a correctional wave. I mean, I believe we're actually seeing signs of that now. I would probably say at least. Just because, of course, we can see the price is now trading back up. Obviously, like the major swing point side of this, if we sort of follow structure, I guess, for example, impulse, correction, impulse, correction, impulse. So if we see this high get broken, it should be quite a good indication, actually, that we are delivering that correctional wave. And if so, obviously then that's when these zones become relevant, where we hope to see and see price interact with those, react from them, and then we can obviously look to build up on positions from there. So it is obviously just going to be a waiting game at this point. Not many opportunities have been showcasing, just because during the creation of this impulse we had quite high volume and volatility, so definitely wasn't as many opportunities as I would have liked to see in the markets, just because, as I say, there's no big pullbacks into clear unmitigated zones. We were leaving quite a lot unmitigated, and therefore it's much harder in those scenarios to find positions, get involved, and be profitable. So at the moment, let me mute the phone. We don't want things buzzing off constantly. Very unprofessional of me, sorry. So we want to see the break to the upside pretty much, in order to confirm the creation of this correction wave. And then once we've got the creation of that correction, obviously from that point, we are then looking for price to tap into one of these, reverse, move lower. So, I mean, we can expect that within the next 12 hours for something to happen and give us confirmation. Now, if we zoom out though, obviously we can gain a bit more context on what's going on. Something that we've discussed before. Taz, foresight, you know, it's very easy for us to sit on one time frame, okay, and just view what we're looking at now. And yes, ideally, in terms of this time frame, in terms of what I'm seeing right now, the one thing I'd like to happen and like to see is for price to trade up and tap into one of these supply zones. But if it goes and invalidates these zones, I'm not just going to sit there like, why has that happened? Because if we zoom out, we see that, oh, well, okay. In terms of this, we've actually had a very high volume move down. We could easily just be delivering a correctional wave in the scheme of this to then move lower, or we will just continue, hit this demand zone, reverse, fly high. So that's what happens if we get way too caught up on the lower time frames and we actually lack that foresight, in which case we lack the ability to see what's going on in the bigger picture, see what's going on in the bigger picture, and to actually just gain an understanding of what price is doing longer term, and see further into the future. So that's huge. Now, one thing I do like to quickly ask, anybody in here, do you have any specific requests for a certain market to be analysed, or a certain top down on a market? If so, ping that through, and I will make sure to focus on that one. I need to actually just do that. I'm going to quickly actually send this stream out on a couple social media sites, just so that everybody is aware of what we're doing. But yeah, as of right now, if you've got any markets you'd like to see me analyze or do a little top down on, make sure to let me know. Okay, make sure to let me know. Let's see, have we got any suggestions? Yes, NZD USD, perfect. We can go on over to that, no problem. NZD USD, okay, boom. Now, are we on FXCM? Yep. So let's go to, yep, 3 months is fine. We can zoom out and have a look. Sweet. Okay. Let me just ping this link out onto some social medias, just get people in. So bear with, just for 2 minutes. Okay, yeah. What's going on there? Perfect. Send that one through, and as I say, give me 2 seconds and I will start analysing NZD USD. The main market I've been looking at is pound dollar, quite similar to euro US dollar, but could be nice to see your analysis. No problem, no problem. I will be 2 seconds. But what I want you to do is predict yourselves, what do you think is going on in this market? Let's say for the next 10 to 20 candlesticks that are created, do you think those candlesticks are going to take us higher, or do you think they're going to take us lower? I want to hear everybody's opinion. Now, I personally believe that following this analysis, technically, following structure, it should go higher, but I do prefer the look of it going lower. And I will actually discuss why that is. Okay, so we just posted that out. Perfect. Okay. Now people should be hopping in from all over to come and join us. Which is brilliant. Okay, so yeah, what's everyone's opinion here? Do you believe price is going to go down, up, bullish, bearish? Let's see. Let us see what everybody's saying. Now, why is the camera gone a little bit pixelated? That's strange. Very strange. Bear with. I think we're better. Hopefully. I think we are. Okay, so higher prices accumulating, ready to take its next move up. Lovely, lovely. Okay, so you probably see pretty similar to what I'm looking at then. if we follow structure and we just identify the key structural points, which is the first thing anyone should do when they load up a market, obviously our structural points, okay, yeah, are going to act as that there, okay. So what's going on is at this point, okay, we've had, well, obviously we would have had impulse, then we started, so correction wave, impulsive wave, correction wave, impulsive wave, correction, impulse. We've obviously come to liquidate previous market low. The second that we've been delivered with that liquidation, liquidity, this high right here, I believe they're like pretty much at the same point. So I mean, we can just argue that this high was a break of structure. So obviously the break of that high is going to be a break of structure. What we would have done at that point, once the break of structure has been delivered, is said, right, well, if the market's coming back up now, is there anywhere from back in the day that's going to act as supply? Yeah, most definitely. Boom and boom are two regions I would be looking at. Yeah, perfect. Let me quickly just scroll to this side on the 1 month to see if that's correct. Yeah, I like that. I like that. Yeah, we'll keep those the same. Perfect. So now, as we get lower, we can see what's gone on here is we obviously had the break of structure. Okay, so we had this major move higher for starters. Okay, so we had this overall move higher. So this would be an impulsive wave. Perfect. Price tapped into the last sell to buy from the initial impulse that took the market up higher. Looks like price is at the area of an unmitigated order. Perfect. I like it. I like it. So what I'm seeing, impulse. Okay, obviously we broke a structural low, so this move does act as a correctional wave, which conveniently comes to tap into a very clear sell to buy candle. Okay, boom, demand zone. Okay, that's the top. Again, we'll just quickly go down for 1 month to see if it's correct. Yep, so we tap back into there, that taps into there. Yep, so that is pretty much the lowest point in the market. That is unmitigated, yeah. Okay, fairs. So that is definitely where we would have looked at. So we've had the tap into there, and we've then had the creation again of the next impulse. Okay, so the reason why I was sort of discussing the fact that yes, technically and structurally this should be moving higher, but I would maybe be swung more to the bearish side just because in this region there's not a lot of volume that's been introduced to the upside. There's evidently not a whole load of demand that has been introduced since the reversal, because obviously once this break of structure happens, that is the sign of the reversal. We can also see the liquidation here could also be a sign or significance of the creation of the spring. So for example, if we see this as an accumulation, we have the silent climax, the automatic rally, secondary test, okay, and the silent climax and silent climax and secondary test act as our lower boundaries. Okay, so this region here acts as lower boundaries, and then the upper boundaries are typically just identified by the automatic rally. Okay, so these are our boundaries, right? Perfect, lovely. And we can see that what's happened is prices obviously traded in, respected those boundaries quite nicely on either sides. We've then seen a manipulation because we've been showing a sign that we've tapped back into this level, or the lower bounds, started to reverse, started to make a move higher. Ultimately, we've bled through. Once we've bled through, we see the break and retest continuation signs. That's typically always going to be done with these candles where we have a very high volume breakthrough, high volume retest, followed by another high volume candle, which showcases the break, retest, continuation. Obviously, that's going to act as a bear trap or the spring. Okay, after we've had the creation of the spring, we've come up, we've broken structure, we've had the test of the spring or the last point of support. And then from here, what should really be happening in an accumulation, okay, in a Wyckoff accumulation, the way that Wyckoff himself depicts it is that once we've had the creation of the spring, obviously the spring itself is the region where the institutions load up on the majority of their buy positions in this market, or would actually start accumulating a lot of shares, hence why it's an accumulation of shares. So we've seen the volume from there, and then once we test, it's the mitigation of the sell to buy in this region. but then also the introduction again of more shares. So I would have liked to see a higher volume move up here. I would have liked to see price surpass the previous high by a larger amount. But nonetheless, until we break this low, I can't sit there and say we are definitely bearish, because I would be going against structure. So as of right now, we are working within these boundaries. Let's, however, go down to the 1 month just to see if inside of here there's any nice zone. So everything in here appears to be mitigated. I mean, we can see where we've had some quite clear sell to buy regions that price has come and tapped us into. Okay, POI demand. Again, another sell to buy, perfect. So on and so forth. Obviously that continues as we trade up. Now, inside of here, all of these positions have been mitigated. So the only thing that I would argue remains unmitigated all the way down here, I think is pretty much going to be this, all the way at the bottom. Okay, now, if we look inside of this, okay, just to follow what price has done, I mean, we could argue if we get a little bit carried away. No, okay, yeah. I'm pretty confident then in saying, let me just play that out to see. Yeah, there's definitely nothing inside of that. So on the higher time frame, the only thing I can see is this as a zone, because with everything else, okay, we have sell to buy that gets tapped into, the overall sell to buy there gets tapped into, the overall sell to buy here gets wicked into, sell to buy there again wicked into, so on and so forth. You know, we follow everything inside of here, and we can see that everything has been mitigated prior. Price doesn't quite hit that, to be fair. No worries, no worries. Obviously, we then come to create the high, and we're now making a move lower. So what is price doing? Because it is hovering just above this. Okay, so there's not been a full tap of this zone, but price seems very hesitant in this region. Very hard to tell what is going on, because on this time frame, this is exactly what I want to see. I want to see the fact that if this is going to be an accumulation, I want to see high volume introduced. I want to see price reacting from these demand zones, making those moves higher into these supply zones before continuing lower. Okay, but if this is going to be an accumulation, we want to see high volume introduced, because an accumulation is representing the smart money operators and the institutions getting involved in the market. What's the one thing we know about when they get involved in the market? We know they bring the volume, the volatility, because of the sheer vast amount of liquidity and money they pop into the market at these points. So I definitely would have liked to see price move up with more volume, because of the fact that we haven't. This could be an indication that rather than this being an accumulation, it's actually a redistribution, okay, where we literally just look at the same things, okay, we mark it up the exact same way we have been doing. We can obviously see we have some intermediary resistance there. Okay, so we would have gone in, selling climax, automatic rally, secondary test. This would be a sign of weakness. We've had the secondary test in B, we've had the up thrust, we've had now the last point of supply, and price is getting ready to trade down. So this is why it's very hard to identify if there is an accumulation or a redistribution in the market. But at this point, we could very easily lean more towards the side of a redistribution, because of the fact that, as I stated, typically once we see the spring in an accumulation, which would be this move in an accumulation, we want to see volume just taking off at that point. Okay, they have loaded in on that many positions that the second this happens, the market is ready to move up. Okay, and that uptrend is in full force. Now, we did have a high volume move up. We've had the pull back into a zone, and it seems like here is where that demand's sort of become exhausted, because it's at this point we should have seen price move up, have that sharp move up. We would have liked to see it tap into this zone, if not the zone higher, and continue in that bullish manner, but we see it's curved off. We've come down again, just curving, and we're sort of at a stalemate. We're sort of at a region where price seems undecided, and when it's like that, obviously it's hard to tell whether supply or demand is in control, without any indication of that. So as I said, it's tough in an area like this to look from a Wyckoff standpoint, because this could both be an accumulation or a redistribution. So yeah, if we just follow structure, we know, of course, that we can get carried away and worry about, oh, is this an accumulation, redistribution? Who cares? Okay, follow the structure. End of the day, we're still working within this impulse. We still have not invalidated the protected low, so technically we are still bullish. We would like to see a reversal inside of this. Who knows, maybe we're just building liquidity above that zone before we tap in, liquidate those, move higher, continue bullish. Obviously we just have to use what price gives us. Anyway, let's say that we look at this correction from a bearish standpoint, okay? So just bear with. Just take a sip of that. Okay, so we've pretty much had impulse, correction, impulse. Obviously there's entire trends within each of those, but what we have seen is once we had that impulse, we had the correction come back up, we've tapped into that, we've reversed from that region, continued lower. Okay, so yeah, that would be a supply zone, PY supply. This would be an impulsive wave. Perfect. Yeah, just like that. And then obviously we could go inside of this, maybe like the daily. We can actually run through why this, in my eyes, is a distribution. We'd focus mainly on this region, okay, as the third box, as what? Sorry, Wyckoff or a distribution. Why is that? Because we've come in, we've had some preliminary supply, buying climax, automatic reaction, some secondary test in this region, sign of weakness. Okay, we're now reacting to this level of resistance. We then blow through that, deliver the break, retest onto that level, move higher, delivering that fake out. So that is also the up thrust. We trade back lower, last point of supply, boom, sign of weakness, last point of supply, break to the downside, retest, new trend form. So pretty perfect distribution there. Obviously we have this as our upper boundaries, and then of course this right here is the lower. Okay, so that makes it a bit more clear as to why these are both signs of weakness. Why? Because they actually push through that level that was holding. More specifically in this example, we see the high volume push out, the retest, volume back down, and then the liquidation. So all of these things inside of this area do happen for a reason. So basically we had the formation of that, price comes back up to retest the region before then breaking lower. Okay, so if we sort of just follow now, we can see, boom, yeah, we've had continual reactions to supply. Perfect. Okay, so clearly the downtrend was in control at this point. Okay, that mitigated that. So yeah, this was an unmitigated position, which again has been mitigated. We've gone low, we've gone lower. This is an unmitigated position here. Okay, so we continue lower. We're looking at price as of recent. Okay, we've recently broken to the upside. This is going to represent the break of structure. So therefore, I think following what my bias tells me as of right now, I'm going to actually look for this zone to get mitigated before we make another move lower into this demand zone, before we then make moves higher. So that is pretty much the story I've got depicted. USD CAD yet, so we'll do gold and then USD CAD. So that is pretty much what my analysis is going to suggest. Let's just recap to run through what the overall bias is. Okay, so in the market we had a very clear downtrend. We then broke structure to the upside, delivered what seems to be an accumulation. That break of structure to us then confirms that we are going to go bullish. Well, we've left over 2 unmitigated orders from the start of this market which need to be mitigated. We understand that if we do go bullish after this break of structure, sorry, I had my eyes closed, I was like really thinking about what I was saying. In my head I was like sort of like going through the story in my head. That was really weird. I didn't even realize I was doing it until about like a minute into it, and I was like, what am I doing? But I was like formulating the bullet points, so like the chapters in my head, which is something really important. Okay, I would recommend you do that. So formulate these chapters and bullet points in your head, which is what I'm doing. So we've had the break of structure, okay, which means that what we're doing is we are delivering an uptrend. this uptrend is likely, or should, hit one of these supply zones. Now when that happens, the mitigation of that zone is going to introduce supply. The mitigation of that zone is likely to introduce enough supply to cause the reversal and start a new downtrend. Okay, but we want to see price tap into one of those first. So when we've seen this bullishness emerging, we know that we want to see price tap into here, to move into here, to continue lower. Okay, so that's our bias. Now for price to tap into that blue demand zone, okay, what needs to happen? Well, what needs to happen is that we actually need to tap into a supply zone because we're delivering a correction wave. So we should tap into this to go into there, to go higher, to continue lower. Okay, so those are the chapters. Alert set there, alert set there. Okay, we can go slightly lower just to see what's happening as a recent, although none of this looks like the nicest bit of price action I've ever seen in my life. I guess we've recently just liquidated that high, so technically we should be working within this as an impulse, which is where we'd look inside of this for a sell to buy, which is likely going to act as this. I can't really see because this box sort of covers what's going on in there. Yeah, that is quite clear. Sell to buy. Yep, so brilliant. We can bring that back. Zoom out. This is a demand zone. Hopefully we'll see price tap into that. If we do, it'll make a move higher into this. Okay, so that is our bias overall. So whoever wanted NZD USD doing, hopefully that gives a nice little rundown. Next was gold, pretty much. Wow, okay, we've had a big move lower. I zoom out, see what's going on. Okay, so this is the most recent bullish impulse in the market. Obviously we see price started all the way down here. We've had impulse, correction, impulse, correction, impulse. This is the most recent impulse. There's two zones inside of here that I have identified as relevant from lower time frames, of course. But I see both of those as relevant. Now we see that as a recent, price has come into to tap this last sell to buy region. Okay, so we came lower, we traded low, we consolidated in this region, built up a lot of liquidity. We then had price fall through, tap this zone, and we've since made those moves higher. So this is quite a nice potential reaccumulation where we built a huge level of liquidity at this region. Okay, we see that price has liquidated that level quite perfectly. We've fallen through. We have depicted a break, retest, continuation, all with the purpose of liquidating people out of the market, whilst also allowing the institutions to load up on positions. So that is pretty much a clear sign of institutional control. So watch out for things like that. Clear levels of liquidity built, seeing fake outs around that level of liquidity, that is always going to be an indication to me or to us smart money traders that there is some institutional control inside of that. Okay, so I mean, the mitigation of this zone should suggest to us that we are going to now continue bullish longer term. We're going to start breaking these highs. However, I did identify this supply zone regardless, just to see how price would react when we hit and tap that. So, yeah, we've just tapped this zone. We'd like to see it move higher and start creating new highs in the market, surpassing that 2070 level that we hit as an extreme high. Okay, so looking inside of here, we have some very clear sell to buy regions that have been left over as price has moved higher. Yeah, we can still agree that those are relevant to us. Perfect, perfect, perfect. As we go lower, we're looking to price more recently. Okay, and I've drawn on where those zones lay. And let's see if there's anything major. No, that mitigates that, which mitigates that. Okay, yeah, all that's been mitigated. So ideally, we want to see it come and tap this zone. I mean, technically there could be something laying within this region, so I guess we may as well identify it because it is still pretty relevant zone. Moon, POI demand. So we have three demand zones there that we'd like to see price pull back into to tap and see how it reacts. This zone is located at, let's place an alert, 1852.32 pretty much. Okay, 1852.32, perfect. So we now have three zones in the market that we'd like to see price tap into, and react from, okay? So now that we have confirmation that a correction wave is being formed because we've had these breaks of structure, we know that we need to start looking at these demand zones for price to come into, to tap, to mitigate, before then continuing higher, okay? So that is the bias as of right now. I've identified this supply zone on the screen just because it does act as the only unmitigated buy to sell inside of this region, and we need to be aware that price could sort of approach and reach that level and have a certain amount of supply introduced. So we just want to be cautious as price does approach that, just in case, of course, price obviously reacts. We get quite a lot of supply introduced and the price goes off to make a move lower. But yeah, as of right now, we want to see the tap into one of these and continuation higher. We zoom in to price. As a more recent, what I was discussing earlier is the fact that we have had this breaker structure, okay? Now this is where we had confirmation that price is no longer moving up in terms of this fractal structure, and yet is instead making the move lower. Thanks for your analysis, you're very welcome. Thank you for coming in and joining us. So thank you to everybody who joins us. Obviously, we like to provide value, but at the same time, good on you all for actually taking that initiative to come out here and learn correctly and properly how to do market analysis as beginners. I assume that the majority of you in here are more on the beginner scale, because that is what we sort of try to target, people who are at the early stages of their Forex career. I keep learning from your analysis, brilliant. Obviously, if there's any specific questions about anything I do, make sure to let me know. But the reason I can sort of just run through markets so quickly and gain a good understanding is just from years, literal years of doing this over and over on a very regular basis, and just from learning as much as I can about the strategy I use. So that's why we sort of preach so much the mentorship and the other things that we provide people, is because you need to know the ins and outs, the intricate details of your trading strategy and of your trading psychology and of routine and all these huge constituents of a successful trader, because without them you're never going to be profitable. But the point I'm trying to get at is, if you sort of watch me or Luke or anyone who is a good trader and been doing it for a while, analysing the market, it's probably going to seem very fast. They're probably going to be saying a lot of things that you're like, what are you on about, mate? But the thing is, you will get to that point because that is just a collection of a lot of information over time and a collection of that muscle memory from just doing it so often. So don't let that dishearten you. I bought the course the other day. Thank you, LAGFX, loving it. I've learned so much. Perfect. I assume that's one of the written courses on the site. Make sure you get as much info out of that as possible. Make sure you ask any questions if you're struggling at any point during that course. But yeah, I mean, each course that we provide does from A to Z cover a trading strategy. So it's definitely worthwhile, in my opinion, whichever approach you want to take. Obviously, any Forex mentors who are out there that sell a mentorship or a trading course is there to streamline your process. You know, the reason why you are paying for something like that is because it streamlines your process. You know, if you go out there and learn yourself, the process of learning and becoming successful is just going to take way longer than it would if you were to actually invest in yourself, okay? It's like a uni course or a college course, okay? Of course you have to pay for that, because yes, you could, I don't know, go and take psychology, university. Everything you are taught is freely accessible on the internet. So arguably, you could say, oh, well, why am I paying for a course if I could just go on the internet and get it? Well, you're paying because all of that information has been rounded up, okay? It has been put in set stages, in certain steps, which are best for that knowledge to be digested. And then that knowledge is actually being reciprocated by somebody who is pretty much a master at that. And one thing that you will notice, if you are really intelligent within any avenue, what that unlocks and allows you to do is explain a topic in a very simplistic manner, no matter how difficult that topic is. Okay, so you are paying for the expertise, you are paying for that streamlined process, and that is why Forex mentors exist, why they are good, and why they can be profitable. Okay, so you know, if it's something you want to do in the future, just grind. Okay, put in a few years now, learn your strategy in and out, learn your psychology, all these constituents, as I said, of a good trader, and then one day you can obviously help reciprocate that knowledge onto people who are just getting involved. There's mentors in everything, okay? There is mentors in everything, and they're required, yeah. But that was a tangent, so apologies for the waffle you just had to endure. Getting back to where we were at, I do want to see price tapping in some of these. As we noticed in the other markets, you know, these are some last buy to sell regions that could have supply zones, but for me to get involved, I just want to see the tap into here, or the tap into the supply zone, which for some reason does not have an alert. Now it does, 1971.6, perfect. So that is X8U to USD. Before we move on, any questions about this market before we hop on to the next? Get them in now before we move on. Or even just give me your own bias on what you believe personally will happen. If you agree with me, if you don't, you know, either way. Okay, seems nobody agrees with me. Brilliant. Okay, right. What was the next market we were going to? Is it USD CAD was the one. I think it will sell deeper. Okay, perfect. Yeah, it's very valid. Very valid. We could follow my bias and still come all the way down to here. So we could still drop 10% in the market. However many pips that is, maybe what is that? 1,859, I think, pips. We have a lot of leeway to move lower, but I think given this recent tap, longer term, we should remain bullish. And I mean, it makes sense. Like, gold is a precious metal. There is a finite source, so it can only really gain value if we're being honest. So that is my outlook, that is my bias on that one. Obviously, again, feel free to throw in any alternate opinions. Just give it a couple more seconds just to see if anyone has anything else to say about that. But if not, we can move on to USD CAD. Perfect. The next on the list. Yeah, we'll go Forex Central Market because that has the most data. It seems like I've already done analysis on this, maybe in a live stream or something. I don't know why, because I don't trade it, so it must be in a call or a live stream that I've done this. So we'll always reset. Okay, back to the 3 month. Okay, this is okay. Yeah, a weird market, that's for sure. Okay, so what I'm seeing here. So obviously we originated in this market going bullish, okay? Because we quite clearly had, you know, there's not the data to see it, but clearly we had some form of an impulse, correction, impulse, correction, impulse. Now, what I think's gone on here is that we have to remember that just because we're only showing data from this point, it doesn't mean there's no data beforehand. Now, before we had the update on Forex Central Markets to show data from all the way from 1971, I believe we were only gaining data from 1998. Okay, so if we actually were to remove everything from this point to the left, let's say we didn't have that information, this market would simply look bearish. Okay, we've just had, we've had a move lower, we're having a move back up, we're getting ready to continue lower, okay? And then one day we hop on the markets, Forex Central Market releases more information, and suddenly we are questioning this because can we really argue prices are going bearish? Because we can see now there's signs and evidence that beforehand we'd been going bullish for a very long time. So have we actually just delivered our first bullish impulse? We're now having that bearish correction before the new bullish impulse. Okay, that's hard to tell. We'll come back just a second. The one thing I do want to just reference to quickly is Euro US dollar. Because same thing, we only had data from, okay, if we do the same thing and highlight everything to the left of 1998, okay, which was like this. So everything inside of that box wasn't given to us as information. So all we had was this, and we had no idea to be able to depict what was going on. Suddenly, we get all of this information released, and we can see that all of this makes sense in the scheme of bullishness. So what I'm trying to get at is that foresight is extremely important. Why? Because more information always makes things make more sense, or I don't know what word I'm trying to use here, but I'm sure you can understand, like, the bigger picture always helps. And if we were to even have data from another 30 years, so from 1940, I think personally what's probably happened is we've had an uptrend for a while. This is finally a big pullback before we continue, because this is a very nice, very clear sell to buy region, okay? For example, if we go to the 6 months and look at this, this acts as the nicest sell to buy region in all of this, okay? Hence why prices come and react to that. But, you know, just to try and help our minds, let's just imagine that what happened here was something along the lines of this, okay? So this red line is a part of the structure. I am bearish on USD CAD, but my friend says bullish. Now I am confused. Okay, so neither person's wrong. You know, whether you are bullish or bearish, you have your own reasons for that, and never be too concerned with what other people are doing, whether other people think it's bullish or bearish. As long as you have your specific reasonings for why you are either bearish or bullish, as long as your analysis clearly indicates that you are correct, then you're correct. Okay, it doesn't matter what the wider population says, because you have a strategy for a reason, because it works for you, because it has an edge, and therefore follow that strategy more than anything. But this is just what I'm seeing, okay? So I think we've had a prolonged uptrend in this market. This move lower and the breaker structure indicates the first correction in the scheme of this, and then we've obviously had a big push up where we've seen some form of an accumulation down here, where we then had very high volume push up. Price is then very hesitant to pull back, because surely if we were starting bearishness and we had impulse correction, we're getting ready for the next impulse, price would just take off, but it's really holding in this level, which is not good if price wanted to be bearish. But if we're going to be bullish, this is actually quite a nice sign, quite a nice indication. So we want to see price breaking out of this range soon, hopefully to the upside, hopefully to continue higher. The reason I have identified this red box is because there is still every reason that price could be bearish longer term. Now, yes, we can argue that this is a liquidation of the zone. Yes, this is a break of structure. But whenever we just see wick coming to invalidate a zone or to break structure, it's not as strong as having pure structure hold beneath. Okay? So if we just wick past the level rather than hold structure past the level, it's different, because if we just wick through, we know that the smart money operators are constantly battling between opening buy and sell positions, okay? So each time price gets to the top here, they open a sell to push price down. Each time price gets to the bottom here, they open a buy to push price up. Now there's going to be outliers where, okay, we hit this region, we're like, okay, quick, we need to sell, we need to push price back down. Oh no, we've accidentally opened too big of a position. Price has fallen through a little bit, but it's okay, we'll come back, we'll stabilize. Oops, we've accidentally opened too big of a position. Okay, so what happens is we're going to have these fake outs, we're going to have these outliers, because of the fact that the process of opening and closing positions and mitigating people on behalf of the institutions is not an easy process, and there's going to be times that happens. What the wick represents is that we have had just a small push through and an instant return. Okay, so what it means is that it's blown through, they thought, oh god, we didn't want it to go that far, let's quickly pump it in on the opposite side and pull price back to where we want it. That's what's happened. The wicks represent the fact that price didn't actually want to hold past that level, which is obviously not a good sign anymore that it is a true break of structure, and instead just a liquidation of the level. Hence why I'm not seeing this as a break to go bearish, but if you personally didn't have that implementation, you could very easily say that that is a break of structure to continue lower. Okay, back to the point. What was the point? Who knows? Yeah, just on the off chance that we are wanting to go bearish, I have identified this supply zone just to see how price reacts when it does approach and comes and taps into that. Because if we tap in and we notice, okay, there's some hesitation, price starts to reverse lower, okay, fair enough, bearishness is taken over, But as of right now, we have no reason to believe that the bullishness is not in control. So that is pretty much the bias there. We can move lower, of course, I don't know, to the daily, where we see that we have a very clear supply zone. We've recently broken structure to the downside. Okay, we made that move lower. We reversed, we traded back up into that supply zone. Yeah, we reversed with a very clear, nice distribution. Continued lower. We've left over another buy to sell region, which, in all fairness, on this daily time frame, appears to start from down here. So potentially, even though I said I didn't think we'd had a full mitigation of this, it's also not that nice because we have left over a lot of liquidity. You see there's no liquidation of these highs, which is never a good sign of institutional control. Liquidity. Nonetheless, we have still taken away, we are still pushing lower. But our target is this low. We've approached that low, we've started to reverse, so that could be an indication that price is not ready to move lower. You know, there's not enough supply in the market to cause that. But nonetheless, if we just follow simple structure, we've got impulse, correction, start of a new impulse, so expecting price to come and exceed that low, protect that high, potentially to come and mitigate this zone, to then continue lower to penetrate and liquidate this low, before then continuing lower longer term. Okay, so that is pretty much the bias. Trying to figure out why I've identified this zone. No idea. Let's roll with it. But yeah, that is the bias on that. Is there any other zones people would like to see? Is the real question. Zones, what am I? I don't know why I'm waffling. Markets is what I meant. Is there any more markets people want to see? Ignore me. It's late. Okay. It's late. I'm losing my mind. Yeah. Any more markets? But yeah, just that reminder. Foresight. I really like that word. Always remembering, as we were mentioning, it's very easy to get caught up in one specific area in the market or one specific time frame, but it's always very important to remind yourselves of the bigger picture and to reveal more information to see what is really going on. Euro to Great British Pound. We'll give this as the last market a very quick run through, and we'll see what's going on. Now, this is my analysis from a very, very, very long time ago, because I remember when these were my templates. Oh my god. Okay, so we can see the very last time I did some analysis on this market was April 2022. So that is 10 months ago, right? 10 months ago? Okay, jeez. So what happened? We had a break of structure. I was watching for the continuation. Okay, fair enough. Wow. Damn. Sorry, I'm sort of like reminiscing for a quick second there. That's insane. But apparently I came and did analysis on this. Okay, fair enough. Jeez. Yeah, there's an insight into my old way of analysing the market. So that is from, I assume, yeah, it will be April of last year. Jeez. Anyway, let's not get caught up on pointless waffle, because I'm too good at that. Follow the structure very simply. Get the path tool out. Okay, impulse, correction. Oh, I can't quite see the height of that, but okay, we get the point. Boom. Okay, obviously we know we're bullish. We are breaking the highs quite clearly. We can see the liquidation of those highs. Liquidity. Boom. Liquidity. Boom. Okay. And then what's happened is obviously this is the impulse we're working in. So we can quickly just identify that. Boom. Okay, so this would have been the impulse. Perfect. Impulse wave. But then we can see that obviously price has come down, tapped into this overall sell to buy region, or a demand zone, of course. If we go to the 6 months, that's obviously going to be a bit more clear as to why I've identified that. That is the sell to buy region. Okay, we've tapped into that, And from there, we've had a very high volume push up. Okay, so our expectation is now that we've mitigated this, price should continue to go and exceed this high. So therefore, I did not mean to do that. This is our final target. Pretty sure I have a template saved for FT, final target, yeah. So we're going to expect price to come and exceed that. We've reversed from that, so we now actually want to see this low get protected. Okay. Protected low. Just because everything beneath this has been mitigated, you know, this sell to buy gets mitigated by that, this sell to buy gets mitigated by that, boom, 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 yep. So now we want to see price continuing higher. Okay, so what we can do then is look inside of this move as the new impulse and sort of just assume that this is going to be the new impulse, so we can then begin to look inside of this for any unmitigated orders, which for starters, obviously this looks like a very clear sell to buy and can therefore act as a nice demand zone. Okay, so we can set our alert there. Our bias, of course, now being that price will tap into this demand zone before continue higher. In this market as well, for some reason we seem very, very range bound. Not really sure why that is. Okay, let's just quickly follow structure. Okay, once we broke that high, that should have been a protected low. So technically, once we break that low, that's confirmation of bearishness. We see this wick, then comes back up. Now, ideally, I don't know what happened September 2022. I'm sure it's something pretty obvious, but as of right now, my mind cannot recall what that was. Boom. That's a clear supply zone. I think that's pretty much what I had identified with my old analysis as well, funnily enough. Boom. Point of interest supply. We've had the break of structure. We've identified the supply zone, okay, because obviously this would act as the first impulsive wave lower. Boom. We want to see price now reverse and reacting to make a move lower to tap into this demand zone before we then continue higher to trade and exceed this high. Okay, so that's the bias as of right now. If we sort of zoom into what price is doing as of current, we can obviously see quite early signs that we're getting ready to distribute. We've had a huge up thrust, price has continued lower. Now what could be happening is the fact that we have a very clear buy to sell in this region. Price is hopefully reacting to this supply zone, and if so, we can start looking and getting ready for these huge breaks lower. This looks like it could be the very early signs of another distribution. That's Wyckoff. Okay, because we've had price trade in, buying climax, automatic reaction, secondary test, sign of weakness, secondary test in B, another sign of weakness pretty much, an up thrust. Okay, so we have lower boundaries right there. And upper boundaries, sorry, I'm pretty sure I just said lower, didn't I? And then these are, of course, lower boundaries. Boom. Okay, so what we need to see is, technically, we need to see price come and penetrate this low all the way down here as confirmation that we've got that break of structure to the downside. If so, we can then start looking for the pullback, retest, get involved in sales. Obviously, we're a while away from that, so let's go to an even lower time frame, like the 1 hour, where we see that we've potentially had a lower time frame distribution where we've had buying climax, automatic reaction, secondary test, the up thrust, we're breaking lower. Okay, well, if we can see price breaking this, we can then start looking for that retest back up and start looking for positions to get involved with. So we can add an alert to this point, add alert. What we can also do, because we don't actually really need to understand any of this, okay, so this is going to be our higher time frame break structure. So if we want higher time frame confirmation that the market is following our bias, we'd of course want to see that break of structure, and then this break of structure just represents a lower time frame break. So if we see price fall through, waiting for the retest, we preemptively start getting in on positions to hope price continues trading lower. We profit then from the sell until price delivers that higher time frame break structure. We then see the retest back up, opportunities for longer term positions before price reverses and ultimately starts making that longer term move lower to come and tap into that demand zone there. So yeah, that is pretty much the overall bias of that, all the way from the top to the bottom, with alerts set pretty much everywhere we need them. So, any final questions from anyone before we end this, before we hop out? Make sure to send them over. Now is your best opportunity to do that. Are we looking? Any questions yet? No. Okay, I think if that is what makes a break of structure valid? Okay, good question. So a break of structure is representing an early sign in a change of trend. Now we know that structural laws are as follows. Let's write these out. Okay, let's throw a notepad onto the screen to help this make sense. Okay, so structural laws. Okay, so for bullish, okay, bullish structure, in order for price to remain bullish, there's two things that must happen. Okay, highs are continually broken, lows are continually protected. Okay, it's as simple as that. These are the two laws that structure must follow if it is to remain bullish. For price to instead remain bearish, highs are continually protected, lows are continually broken. So these are the two laws for both bullish and bearish structure. Now, as we stated, in order for price to remain bullish, it must follow these two. In order for price to remain bearish, it must follow these two. So if we are within bullish structure, and what happens is that we have a low that is broken, that is an early sign that bullish structure is over. Okay? Typically then, once we see, for example, if we just use a brush tool, okay, we know this is bullish. Why? Because the lows are being protected, price is not exceeding the lows, then the highs are being broken. Okay, now what can happen is that boom, okay, price breaks to the downside, we have now not protected a low. So going back to the list, boom, we've not done that. So that is an early sign, okay, that what? Bullishness is ending. What we need to fully confirm it is for price to come back up and protect the high. Why? Because in bullish structure, highs should be continually broken. If instead they are protected, we have now invalidated both of these, and instead we have changed to protecting the highs and breaking the lows. So we have switched from bullish to bearish. Now a break of structure is showcasing that switch or that flip from bullish to bearish, pretty much. So break of structure is representing this point in a market, okay, like I'm showing here, because what's happening, and this is where it'll get confusing, because fractally, okay, we have impulse, correction, impulse. So technically this low is where the break of structure comes from, but I know that there's nothing below this low that price would need to go to, so therefore this low would still indicate a sign that this structure is being invalidated. So let's use a path tool. So the red path is representing higher time frame structure. Okay, we can change the opacity of that to 100. Okay, and then as we go lower and look inside of here, we can now, for example, use a different color path to identify this structure. Okay, now this is potentially where you could argue that I've drawn this out wrong, just because on this time frame, technically this is the protected low. Okay, so this would be the break structure, but again, I quite preemptively assume that there's nothing beneath here in between those that price needs to react to, and if it was to continue bullish, it would actually hold this low. So I'm implementing structural laws alongside just things that I've noticed over time to streamline the process, but it's just an indication that price is stopped holding or stopped following the laws it needs to hold in order to continue the current structure it's following. So a break of structure just indicates the flip from one set of laws to the other set of laws. So the flip from bullish to bearish or from bearish to bullish. So that is a break of structure. Okay, hopefully that all makes sense. Hopefully that clears things up. But we're gonna shoot off. It is 8 PM here in the UK, so we're getting late. Does the long wicks also make a break of structure valid? Okay, so going back to which market was it? It was USD CAD, wasn't it? If you remember what we were saying about USD CAD, again, yeah, it's a fair point. In order for a break of structure to be valid, we need to see price fully break that low, okay? Because what's happened is this is the overall swing point, but there's no candle that holds below the low. Now, if there is no candle that holds below the point, in my eyes, that's not a valid break of structure. If it's only wick holding below that point, that is not a valid break of structure on the time frame you are viewing. So because there's only wicks holding below, that's not a valid break of structure. Let's say the line was here, right? Well, now we have a candle body holding beneath. That's a valid break of structure. Okay, so that is pretty much how I figure that one out. But yeah. Perfect. I mean, thank you to everyone who tuned in today. I know it's a bit of a later one. We usually do these a lot earlier on in the day. So there's potentially not as many potential entries showcased within this. Instead, we have actually just run through some top down and taken some requests from the chat. But it's been fun to hop back on some markets that I haven't looked at in a while. It's always fun to do that because I'm quite strict. I only look at like maybe 2, 3, 4 markets maximum. So to sort of come back and throw the analysis onto a different one is fun, I'm sure we can admit. Thanks for everything. Yeah, no problem at all. I appreciate you tuning in and giving the support and hanging out with me and giving me questions and things to discuss. Otherwise, it's a bit boring when I'm sat here with not many people in the chat or not many people having a convo. So thank you for coming in and holding a convo and keeping myself entertained as well. It is very much appreciated. But yeah, hope everybody now moving forward enjoys the rest of your day. Make sure you do your own top down analysis ready for tomorrow, ready to smash the markets and have a profitable week. We can start doing these live sessions on a more regular basis because I think it helps. You can actually ask live questions and speak to us in a live scenario, so we can definitely look to do that. But again, thank you everybody for tuning in. Before you go, make sure you give the video a little like. That would be very much appreciated. And yeah, go check out our other content. If you have any questions about anything, we pretty much have a video for everything, so go check it out. But yeah, we'll wrap this up now. Thank you everybody for watching, and I'm sure we'll see you very soon on the channel. So yeah, take care.